not on the agenda there, but HCA is a leading, as Paul says, US hospital group. It was founded in the 1960s and it's headquartered in Nashville, Tennessee. Market cap is $28.6 billion US dollars, price to earnings ratio of 10.6, no dividend yield. Why have you chosen HCA as
well, it's
the
the
US
largest
stock?
of the listed US groups, so it's interesting. If you look at the graph though, what you'll see is that it's done pretty well through the period of Obama's administration. Since then it's been wobbling a bit because the Republican administration now is trying to roll back Obamacare, but as you probably remembered, in recent weeks they sort of failed to do that. But in the US, the problem is not so much that there isn't a lot of focus on healthcare, it's just that there's a moderate concern that with Republicans at the helm, they may reduce the amount of state support for the insurance market, which would lead to slightly lower spending. HCA has also had quite variable earnings, to be fair.
Obviously, the key question is where do they go from here? Is there an opportunity to buy in at the $79 level?
Look, I mean, the share's relatively good valuation, 10 price earnings ratio. I mean, the earnings outlook is not fantastic, and they have had variations in earnings. Quite an interesting history. KKK and the family.
Excuse me, the KKK as in the Ku Klux Klan?
No, as in the private equity firm.
Oh, Kohlberg, Kravitz and Roberts.
Correct.
I was on the same agenda as you. KKR.
You know, this has been a weekend of such outbursts. So
yes, it was. No. And they've KKR, sorry, and they bought the company off 2006.
Took it private. Yes.
Took it private, paid 33 billion. The market cap today is a little bit less than that, 29 odd billion. So it hasn't been the most successful investment. They brought it back to the market in an initial public offering. They've done another rights issue. Now, the couple of interesting things with this company. First of all, they are expanding massively. Now, although this is the largest US one, it's still actually a very small group.
Yeah,
you know,
it's interesting.
SA hospitals have got way more beds than what these guys have got, even though they're the biggest listed one.
So huge growth potential is what you're saying?
No, there is possibility, but it's a very fragmented market. Now, these guys are spending money hand over fist to try and expand. I mean, it's quite interesting. Because of low interest rates in America, you can run massive debt. I mean, these guys have got a debt to equity ratio of almost 100%. Now, in South Africa, that would be a severe drawback for any company to have such high debt. Whereas in America, with low interest rates, you can carry it. In fact, they did almost $1 billion share buybacks in the last year. Yet, because your interest bill is so low, you actually covered. Your earnings easily cover, 2 or 3 times cover the actual interest bill. But heaven help this company and many others if interest rates do spike at some stage in America. But the outlook is actually very, very subdued for this company.
Subdued outlook doesn't sound like a great opportunity,
Paul?
Because
the sector's fragmented, it's interesting. Lots of big private medical institutions in the US are sort of semi-profit, like the Mayo Institute and some of those big Boston hospitals and so on. So I don't know. I mean, I think what's long-term going to happen in healthcare in the US, though, is that Obamacare will stay. I don't think the Republicans have got the means to get rid of it, and it's a very big touch point issue. So, but having said that, I think
are you hot?
I'm going to go not hot. There's too much going on that makes it
not hot.
Even though it's a 10 PE, the earnings aren't exciting. I'll go not hot.